What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on Tesla, Nio, Virgin Galactic, and ChargePoint. Come for the information, stay for the fun clips. So this week was not for the faint of heart. We saw a steady decline in the Tesla stock price, with it eventually cratering down as low as $768, which is a level that we really haven't seen since the year started. But it really wasn't just Tesla. Things were actually off to a pretty good start before the market decided to pull a 180 and kick us right in the face. And if that wasn't bad enough, on Thursday, it delivered a crushing blow. If we were to illustrate the interaction between the market and my portfolio, it probably would look like this here. Wow. I mean, truly devastating. How devastating? Well, enough for me to actually sell. More on that later. But I know that some of you felt that pain, which prompted you to actually reach out and ask what was causing the market downtrend. And so that will be the focus of today's video. I'll talk you through what happened, what prompted the downtrend, or at least contributing factors to the downtrend. We'll cover what I sold and why, and then we'll wrap things up with the weekly performance review by percentage gain or loss for the portfolio. All right, let's get into it. So let's start by answering the question of why did the market crash? There's probably a few things at play here, and I'm sure that the jobless claim announcement earlier in the week didn't help at all. But I think what matters more is going to be this, and we'll use Tesla as the example, but understand that the same concepts that apply here are going to be applicable to the broader market, and that's why it's so significant. And so those of you who have been following the channel have heard me talk about Baillie Gifford. It's an investment firm and also the fourth largest holder of Tesla publicly traded shares. On Monday, or earlier this week, I think it was on Monday, they announced through their SEC filing that they have reduced their position in Tesla from 8.1% in their top holding fund down to 5.1%. That now leaves them with about $22 billion worth of Tesla shares, but that's a significant reduction and a large inflow of shares onto the market that were previously held. So that's going to play into a drop in the stock price. Beyond that, we have Capital World Investor, which is Tesla's second largest institutional investor. They've also announced that they've reduced their stake in Tesla from 11.8% down to 4.82%. And if you're wondering, that leaves them now with around 45 million Tesla shares. And they're not the only ones, right? There's a few others who have done the same move earlier in the week and disclosed that. And so you might be asking yourself, well, why are they all of a sudden dropping their shares in Tesla? Does that mean that they no longer believe in Tesla? Well, quite the opposite, actually. And what you need to know is that for large funds such as Capital World Investor, Baillie Gifford, they are bound by limits on how much of any given stock they can hold in their funds. And typically that can be, that varies, but in their case, it's around 5%. And they can exceed that amount by a little bit for X amount of time, but eventually they have to always reduce down to that 5% in order to comply with the regulations. And so what that means is that when a stock outperforms the market like Tesla, and the value of those shares grow exponentially, well, then large funds are forced to sell. And when that happens, obviously that's going to cause large stock price movements in any given company. And those requirements are going to apply to all large institutions and are not unique to just a Tesla stock, right? This is going to apply to any company that they own. There's only a certain amount that they'll be able to allocate to, a certain percentage that they'll be able to allocate to any given stock. And so every quarter, this is, again, pretty standard, those large funds are going to go through and rebalance their portfolio to ensure that they are complying with those quota requirements. And now that we're near tax season, this is going to further exacerbate the rebalancing efforts because this is when large institutions will willingly cut their stake in certain stocks. And so they'll willingly take a loss in order to offset the capital gains that they are taking when they're cutting companies like Tesla who have been outperforming the market. At some point, I probably should make a video on capital gains and loss and how does that relate to taxes, but that will be a topic for a different video. The bottom line is what we saw is pretty normal. Portfolio rebalancing is just part of the standard practice that large institutions will engage in to ensure that they're, again, staying within the right quotas for each one of the stocks that they own and that they have the right allocations for each one of them. So that's a pretty good segue into what I sold and why I sold it. So let's talk about that. All right, so let's talk about what I sold and why I sold it. But before we do that, we'll take a quick step back and talk through portfolio structure. One of the things that I came across as I was reading up and researching how to set up my own portfolio was this structure that says that you want to have at the top your high conviction stocks or companies. These are going to be your long-term investments. So we're talking 5+ years that you plan to hold these. You may trim or add, depending on what's going on, but these are the ones that you're going to build your portfolio on. Then below that, you're going to have your midterm investments. Those are going to be the ones that you're going to hold for at least a year or more, but you're not necessarily attached to them, right? So if needed, you are willing to sell out of that position completely. Then you have your short-term plays. These are going to be less than a year. And really the goal there is to simply have your money continue to work and appreciate instead of just sitting in cash and not doing anything in your portfolio. And then the last group is going to be your speculative plays. And those are going to be the ones that you allocate a 1% or less to of the total value of your portfolio. And the idea there again is that they may very well blow up or they may not. And if they go to zero, you didn't allocate that much money to them that it's going to hurt you or be a meaningful loss to your portfolio. So what this means is that your midterm, short-term, and speculative play stocks all serve as fuel to propel your high conviction stocks to new heights, right? Meaning that if you need to, you will sell out of those positions and redirect that capital towards your high conviction stocks. Well, in my case, Nio and Tesla are my highest conviction stocks, meaning that those are the ones that I want to advance the most. And so when we find ourselves in a situation like this where the market crashes or when we experience pullbacks, I'm going to rebalance my portfolio if I don't have sufficient cash to make sure that I can redirect some of that capital towards those two. The other thing to be aware of is that this approach of reallocating funds, redirecting that towards your high conviction plays is not something that I came up with. This is what large institutions and successful investors all over the place are doing. And you can see that in the example of these next two here that I'll mention, and I'm going to use my notes so that I don't mess it up. We have, and I'm probably going to butcher this name, but here we go, Susquehanna Advisor Group. And so they bought 49,569,773 shares of Tesla. That's so raising their stake in Tesla to 5.2%. That now makes those shares worth $39.8 billion. And then we have Citadel Security LLC, who raised their stake in Tesla to 3%, or the equivalent of 28.5 million shares. Last but not least, we have ARK Invest, who spent $160 million plus on Tesla stock this week. Again, remember that ARK Invest is super bullish on Tesla. It's their highest conviction stock. And when the price was low, they saw it as an opportunity and move funds around in order to take advantage of this opportunity, right? So as people sell, others see it as an opportunity and buy up. And if you don't have cash available, then that means that you have to sell other securities to create or to generate that capital in order to go after what matters the most to you. And so this is why you're seeing all these price movements and why, again, there was so much selling and buying throughout the week, leading to that extra volatility that we saw. Kathy Wood, the CEO of ARK Invest, was actually on CNBC earlier this week discussing their trade and the why behind it. So let's take a quick listen.
That is why our confidence in Tesla, going back to the largest position in our portfolio, is so high. There will be a valuation reset. There will be fear, I'm sure, and we will use it to our benefit, concentrating our portfolio to our highest conviction names. But I think longer term, especially given the powerful growth trajectories that the 5 innovation platforms around which we revolve all of our research, that those trajectories are so powerful that these multiples, these companies are going to grow into their multiples a lot faster than most investors are now expecting. And so that's a source of confidence for us.
So how do you do it? So rates right now, they're moving up. Do you say, okay, we may be in a little trouble here with this valuation reset. They're going to jump up another whatever up to, maybe 2%. Do you get in front of it, or do you just take it as it comes?
No, we use it actually. And so what we've been doing for the last 6 months is expanding the number of names in our portfolio. And we do that as a bull market extends, because in some ways it's a tax efficient strategy. What we will do during a correction, especially a severe correction like the coronavirus crisis presented, we will sell names in which are creating losses now, because again, we've bought them, we've diversified and bought them more recently. Sell those names creating losses to buy our highest conviction names.
That's well said. Cathie Woods is one of the smartest investor and fund manager at the moment. She's on the short list of candidates to succeed Warren Buffett for the title of most accomplished investor of our time. And so when she speaks, her words hold a ton of weight. So with that said, let's take a look at the weekly performance review for my portfolio by percentage gain or loss and see if the rebalancing effort that I did earlier this week has paid off. So I'll turn the screen recording on and let's take a look. Okay, so remember that this was a short trading week and we actually started off in the red. We were down 0.84%. And by the end of Tuesday, we were right around 0.03% in the green. From there on Wednesday, we saw a nice spike up to 3.57% before dropping pretty sharply and rebounding up to, it looks like 5% gain for the end of Wednesday. And then from there, Thursday is when things went terribly wrong. We talked about that earlier, but you can see that nice sharp decline to negative 0.762% in the red. And that's when we did a lot of the rebalancing efforts in order to, as we came back into Friday, see that bounce back, peaking at 2.01% in the green. And then that tapered off to where we are sitting now at 0.04%. So all in all, pretty good week here. Definitely not for the faint of heart, but as you can see, thanks to that rebalancing effort, we did manage to end in the green. So we're further ahead than we were when the week started. And that's really all that matters, right? That we're continuing that trend upward and recovering even where we're seeing some volatility here. So couldn't be any happier. Again, we're going to continue to adjust as we move forward. And now looking forward to next week with the Nio earning call coming up. We are all also going to be hearing from Virgin Galactic and their earning call and see where things go from there. All right, people, this will do it for today's video. Let me know in the comments below if you held your position, sold, or just went through some kind of rebalancing effort yourself. As always, if you found the content insightful, drop me a like and share with your friends. And for my newcomers, remember to subscribe and hit that notification bell so that you don't miss any future content. As always, thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.